Hello, and welcome to myfinancesteacher.org. Let's talk about gold again because over the last few days, what we got is a retest of the recent lows that we saw on the 1st of July. However, that retest of the recent lows didn't actually give us a lower low. It's somewhat strange because on one hand, the low on the 1st of July is a little bit too early for a daily cycle low. On the other hand, with the recent retest, we haven't actually seen, let's call it a proper daily cycle low with a lower low. After that retest, what we saw yesterday is a significant rise in gold price from around 1390 all the way up to 1420. So it doesn't seem likely that over the next couple of days we're going to go below 1380 to give us a lower low and the final confirmation of the end of the daily cycle. So if you squint somewhat, what you kind of can see on the chart, something like this, which is close to a symmetrical triangle forming on the gold chart. In that case, what we might expect over the next several days, couple of weeks, is some volatility anywhere between 1380 and 1420 with a narrowing range. Since gold price is going to be possibly range bound over the next couple of weeks, the 50-day moving average will catch up to the price, RSI will cool down somewhat, and that might be some sort of a mild end to this current daily cycle. In technical trading, symmetrical triangles have an equal chance of breaking either to the upside or to the downside. But in the intermediate term, since we are still early in the intermediate cycle, they usually last for about half a year, as I mentioned before in many of my videos. And the current one has been going on for, say, around just over a couple of months. We are still relatively early in the intermediate cycle, so I think the breakout of this triangle will likely be to the upside into the second daily cycle within this medium-term intermediate cycle in gold. If we're going to see a break up from this symmetrical triangle over the next couple of weeks, what is our next target? Well, generally for triangles, the target is the height of this triangle, which is in this case, let's say around $60. And if gold breaks out somewhere, let's say late July, at around the price of, well, say 1420, $60 above that would give us our first target of around 1480 for the second daily cycle in gold. I don't know how about you, but I would quite welcome 1480 on the gold price. And whether that will turn out to be the top of the intermediate cycle, I guess we'll have to bridge that cross. I guess we'll have to cross that bridge when we get there. For now, I also want to talk about the gold miners, GDX. The reason I want to talk about it is because yesterday there was an attempt by GDX to again break out of this resistance zone at around $26. And actually this resistance zone has been active for quite a while already, for a very long time, all the way since October 2016. So if this breakout is going to be successful over the next couple of weeks, then the next couple of resistance levels would be at this top in September 2016 at about $28.6. And if that resistance is broken as well, the next resistance is at about just under $32 on GDX. It's still questionable whether we are going to see a significant breakout from that resistance zone at 26. After all, you might look at RSI and it has been quite deep into overbought territory on GDX. And one might find similarities between what's happening now and, let's say, in August 2017, when GDX was again approaching close to that resistance level, RSI was overbought. And what happened after that is a significant decline, both in GDX and gold price. Again, something similar happened in February 2017, when GDX was looking very strong, coming close to that resistance level. But again, RSI, which was only slightly overbought at that time, turned out to be predictive of a significant decline in GDX, all the way down to just over $21. So on one hand, the fact that we're already getting into overbought territory on GDX doesn't really seem good, and there are examples of bad things happening to GDX when RSI is overbought, especially in 2017. But if you look a little bit further into 2016, there were cases when GDX continued to pump upwards regardless of RSI getting into overbought territory. Look at February 2016, for example. RSI is moderately into overbought territory. GDX doesn't slow down much. Again, April 2016, RSI is again moderately into overbought territory. GDX only takes a short-term couple of weeks breather and continues upwards all the way up to $32. So which comparison is more applicable now? Are we in a similar situation to early and mid 2017 when overbought RSI predicted a significant crash in GDX? Or are we in a situation similar to early 2016 when GDX was just pumping up all the time and pumping up for actually about half a year? Well, I'm not 100% certain, and I don't think anyone can be 100% certain forecasting any price action. But for a couple of reasons, personally, I think GDX does have a good potential on the upside. And we might at least test $28 on GDX, this next resistance level, over the next several weeks. And there are a couple of reasons why I think so. First of all, GDX has been stuck within this range roughly between $20 and $26 for a very long time now. And after being significantly oversold in September last year, we might actually see a slingshot from one extreme, which is a significantly oversold, into another extreme. Why not more significantly overbought as we test $28 or even $32 on GDX? So in a sentence, one reason is it's been capped under this resistance zone for quite a while, and it's time to break out of that resistance. And the second reason why I think GDX has a potential to actually break out this time is because we are, again, relatively early in the intermediate cycle. It's been going on for a couple of weeks so far in gold. They generally last for about half a year. So we're still likely to have another maybe couple of months of upside in gold price. And that might help GDX to finally push through this resistance zone. So in my personal opinion, I would give it, say, 70% chance that GDX is going to go higher and retest at least $28 over the next several weeks. And let's say a 30% chance that GDX is going to come back down and close this gap on the 20th of June. Besides, even if GDX does close that gap over the next couple of weeks, as gold generally is stuck within that triangle formation, once gold breaks out, we still might see GDX retesting that $28. So as you see, I'm still bullish on gold and GDX, and still in my personal portfolio, my precious metals related part of the portfolio is 100% invested already. But of course, I'm always interested in your opinion. Tell me, what do you guys see on the charts? Especially let me know what you think of this triangle idea. I'm not really sure if it's actually something that is going to play out over the next couple of weeks. While you are sharing your opinion in the comments below, remember to hit that like button, ring that bell for the notifications, subscribe to the channel if you haven't. Check out my website, that's myfinancesteacher.org. Not much happening there at the moment, but I will think of something interesting in future. Why not follow me on Twitter? That's at myfinancesteacher without the last letter R. And of course, good luck in your trades. Hey, if you're still here, let's have a look at this image for dessert. This is the price of gold in both the US dollar and Australian dollars. All through this rise in gold price from 2008 all the way even until late 2013, early 2014, the price of gold in Australian and US dollars was quite well correlated. This is of course just eyeballing it without calculating any correlation coefficients. But since 2014, it seems that there is quite a bit of divergence. There is now a big spread between these two different prices. And an interesting thing to see here is that in Australian dollars, gold has actually reached the previous all-time high already. My question to you here would be, with all of that printing that the central banks all over the world have done since the global financial crisis in 2008-2009, including the Fed, including the central bank in the US, how long does it take for the biggest fiat of them all, which is the US dollar, to depreciate enough so that the gold price comes back to its previous all-time high again? My take is, in a few years, an ounce of gold for the price of $1,400 would seem to be quite a good bargain.